most valued commodities in the world with a history of utility in currency and jewelry, as well as being a favored safe haven assets. Today, in this video, we will discover what gold is used for, the history of the market, and how it works, and what affects gold prices. Main points about the gold are what is gold and what it's used for, what affects gold prices, how can gold be traded. Gold is a precious metal covered throughout history for its vibrant color, malleability, and relative scarcity. It has industrial applications in electronics and computing and is enduringly popular as a jewelry manufacturing component. Gold has always been used as a monetary instrument as well as safe haven asset due to its tendency to retain or increase its value during periods of market turbulence. Gold as an asset. From the late 19th century up until the outbreak of World War I, the value of currencies has been anchored to a specific amount of gold. Starting at the end of the World War II, most of the planet's largest economies operated within a financial system based on a set gold price which was tied to US dollar. For thousands of years, humans have placed a high premium on gold. It has represented the currency of some of the world's most famed civilizations, such as empires of ancient Egypt and Rome. The only ended in 1971 when the US opted to stop aligning its dollar with the commodity. While the precious metal no longer functions as an official currency, the gold price remains a highly influential element in financial markets and world economies. Next, factors affecting gold prices. Stability, supply and demand, central bank, and ETF, exchange traded fund. Let us discuss in detail stability. As the bedrock financial instrument underlying global currencies, gold is considered as fairly secure asset. Its price tends to rise in times of turmoil as government and investors turn to it as a hedge against uncertainty. Inversely, gold prices usually drop in stable times as riskier yet potentially more profitable avenues of investment become more viable. Next, supply and demand. As with most assets on the open market, an excess of demand for gold, normally for jewelry making, manufacturing, manufacturing certain medical, industrial, and technological products, drives up the gold price, assuming supply is constant. On the other hand, a weakening of demand often has the opposite effect on its value, sending the price lower. Next, central banks. Most of the world's gold reserves are controlled by central banks within developed nations in locations such as Europe and North America. As a result, these banks wield immense pricing power in global gold market. If the banks suddenly increase or reduce their gold exposure at once, even slightly, this would have a magnified effect on the gold price. Central banks therefore rely on a joint commitment to refrain from unilaterally engaging in large-scale gold sales that could destabilize global market. Next, ETF, exchange traded funds. While exchange traded funds are generally intended to mirror the gold price rather than influence it, many large ETFs hold a significant amount of physical gold. Therefore, the inflows and outflows from such ETFs can affect the metal's price by altering the physical supply and demand in the market. Next, gold affects currencies. When it comes to gold's relationship with currencies, its correlation with USD is a principal talking point as the US dollar remains the benchmark pricing mechanism for gold. When the value of USD increases, gold becomes more expensive for other nations to purchase. This ultimately causes demand to fall, which is why there is generally an inverse relationship between the US dollar and the gold price. Additionally, when the dollar starts to lose its value, investors look to gold as a safe haven alternative, and this helps to push its price up. Next, now have a look on the chart. It is a weekly chart of US dollar index. As you can see, US dollar index is in downtrend. It's consistently below EMA 30 as well as suggests strong downtrend. As the coronavirus pandemic expanded to influx more liquidity in the market, Federal Reserve was about to start rate out cycle. So dollar index started downtrend. Now look at a gold chart. It is a weekly chart of gold against US dollar. You can easily notice gold was in uptrend when dollar index was in downtrend. That is why it is said that gold and dollar index are inversely related to each other. The below chart shows this inverse relationship between the US dollar index and gold. Next, gold fact. Value of gold is linked to the value of a nation's import and export. Countries that export gold or have access to gold reserve will see their currencies strengthen when gold prices rise due to the value of the country's total exports increasing. Next, trade gold. Traders might consider trading gold because as a safe haven in times of economic turbulence when it tends to hold its value or appreciate. To capitalize on a weak US dollar and hedge against inflation. To maintain a diverse portfolio of commodities, stocks, bonds, etc. So friends, thank you for watching. See you in the next video. Bye bye. Take care.